Good evening. This is the video newsletter for buysellshort.net for Tuesday, May 4th. Absolutely ugly session on Wall Street today. And yet, again, like a broken record, they pulled the Greece debt crisis out as their excuse to sell off stocks again. It is kind of funny. Every couple of days, the Greece debt crisis gets resolved. I mean, this weekend we had them come up with a $144 billion rescue package. Everything was hunky dory yesterday. Then this morning, all of a sudden, the bailout is in jeopardy again. Essentially, what is happening is the same thing that happened to the U.S. banks back in 2008. You've got the same scummy hedge funds uh, and banks playing the rumor mill, and with the help of Standard and Poor's and Fitch and Moody's, the three blind mice, they're able to create a crisis or actually make the crisis worse than it actually should be. Now, the alert we sent out right after the open this morning about raising cash levels, or a reminder to raise cash levels, every time we've seen the Greece news come out over the last few weeks, the next session after they beat the crap out of the market, we've seen very nice bounce backs. What changed today, however, and if you look at the business headlines, you see absolutely no mention of this today. But the real reason we saw such a big sell off, especially in commodities today, was China growth was revised down or reported lower than expected. China has been trying to stomp on the brakes on their economy for the last 6 to 9 months. Every once in a while, we've seen the market sell off when China's come out and raised interest rates, trying to slow things down, starting to take a little bit of effect. Granted, what they're slowing their economy down by is piddly, but that's not what matters. It's the perception, and that perception, along with the perception regarding the Greece bailout package and the overbought levels we're at, was really all they needed to take the market lower today. Looking at the 15-minute chart, you can see we've pretty much broken all supports. That head and shoulder formation we saw or mentioned in the Sunday video looks to be coming to pass. If we actually look at the daily chart, you can see here on the daily chart, just talk about a lot of chop here. Big down days, we reverse it back. Big down day, we get it all back. Big down day, and we slowly have been moving lower. But we've been closing below the 20-day exponential for a couple of days now. And what this is starting to look a lot like is what we saw back in early January. If we break through the 50-day moving average tomorrow, we're probably going to see 10,700, and then below that 10,500. Those are the next Fibonacci retracement levels around the 10,540 areas, a 50% fib retrace, and the 10,700s is a 38% retrace. Very, very healthy. We need this. We are running out of stock plays. We need a retrace in this market, and they seem damn well determined to do it right now. We still got a little bit of downside on stochastics. If we flip over to the SMH has been sort of warning us about this retrace over the last couple of days. That one touched its 50-day moving average today. It sort of let us down and was pretty stable for most of the session, even though the Dow and S&P and Qs were hitting new day lows. SMH was able to hang solid. Next support area is around 2750. We're in that support band going back to early March and then back to early January, late December, around 2750, 28 level. RSI has broken 50. Stochastics got a little bit more downside on it. We've got a negative ADX, and volume has been higher on the downside on these down days than it has been on the upside. Also on the Russell 2000, again, further weakness on that. We got to close below the 20-day exponential. First time we've closed below the 20-day since we saw the February lows. And the last time we saw the Russell 2K close below the 20-day, that was back in early January. We saw that, 2 to 3 week sell off. We've gone an extended period here without any meaningful retrace in the market. We're going on, almost 3 months since the early February lows. We're up substantially in all the indices. Let's look at the Dow daily chart here. And before that, every couple of months, going back to the March lows of last year, we saw about a 5 to 8% correction after we had a big up move, and we were averaging about 5 to 800 points on the downside. So if we assume we're going to have a similar retrace here, we're probably looking for that 10,500 to 10,700 area, where the buyers who've been on CNBC all day today coming in telling us to buy stocks, will they'll probably make their stand. Stock plays, as I mentioned in the alert, good time to go cash, very, very high cash. Now, for some traders, high cash is 25%. Some traders, it's 50, some traders is 100%. It's up to you. Just make sure you've got some cash. If you're comfortable writing some stocks down, so be it. Some traders are actually like that, but you want to have some cash. We're patiently sitting on the sideline. We want to be in the mindset and the ability where we can jump in and grab bargains, especially when they get ultra ridiculous, which is probably what's going to happen. As I've mentioned before, retraces in the market are a good thing, especially if you're high cash, but they are a good thing. It just means we get to rebuy stocks and get ready for the next wave higher. Economic data over the last couple of days has been stellar. We had more great economic data out today. The economy is turning around nicely. The government stimulus is now wearing off. Consumers are starting to come back into the economy in a big way, and we're going to start to see job growth start to boom in the next couple of reports, in my opinion. We don't see market tanks in that kind of environment. A total silliness to be talking about that. We're up massively recently. Retrace is in order. Look forward to the retrace. Now, granted, given the trend that we've seen lately, I would not be surprised to see them try and jam the market in the morning. I mean, we could be up another 100 points again, but it's going to be more of the same chop, and a lot of the speculative money has come out of the market over the last day, and odds are we're going to at least test the 50-day moving average, if not lower, on the Dow. We actually really need to. Bouncing back tomorrow, in my opinion, would not be a good thing for us. We'd rather see a few days sell off, and then the move back up would be all the more powerful. Stock plays really of interest today, only a couple of plays. PSID, Positive ID Corp. This is one we got a fat gain out of a couple of weeks ago. Got a nice little pump on it today. Very strong volume, held up very, very well today. And stocks that have been doing this lately have seen some follow through in the next session. So target would be $1.60, $1.70 with stops. If you've got some room, the 20-day exponential at $1.38. We, of course, had a monster winner over the last 2 days, CRXX. You'll recall I said this, my gut was telling me we were going to be in for a big, big move on this one. Stock hit, 202 today for almost a 50% gain in 4 days, especially with the market selling off. Cannot argue with that. Our other gut biotech play is INO. Very strong support, around $1.35. Would probably give this one room to $1.30. Breakout is $1.40 if you want to wait for that to break out, but possibly or probably news is going to happen the same way it came on CRXX, and you see a gap open if and when it does come. Really, times like this, favorite plays if you want to hold on to them. WAVEINO, of course. BNVI for the ASCO conference upcoming. But really, it's, move to your comfort level. If your comfort level is all cash, go all cash. If your comfort level is 50% cash, you go to 50% cash. If you've got your cash and the ammo, two things are going to happen. You're going to be able to buy dips. You're not going to be frozen with like a deer in the headlights, unable to act because you're sitting on losses. And, just the simple fact of sitting on high cash and watching the market sell off, is kind of liberating. A good flush every once in a while is very, very good. I was going to play the Doom song today, but I'll possibly wait a couple more days. Maybe things will get a little worse in the market. But, things aren't that bad. The economy is booming. We don't see market tops in an environment like this. We're overbought. We need a retrace, and we may finally have that retrace coming up. And then lastly, one other thing that shows us, the market may be in store for some more weakness. ITMN biotech stock was trading at 45 cents today, down at $9 an after hour. FDA looks to be moving back into a denial phase. Drug denied, stock down 75%. If this had happened 2 weeks ago, the stock would probably be down, 5 or 10 and not 75%. So just further indication that the speculative money is, at least for now, moving to the sidelines, which is where we're going. And, look forward to the retrace. There will be trading opportunities galore. We just get to rebuy a lot of our plays much cheaper, especially with ASCO upcoming. So that's it for the video. I will see you guys in the chat room tomorrow. Good night.